Dear viewers, welcome to yet another episode of Expert Speaks. There are many NRIs, in spite of being an NRI for many years, still continue to use the resident bank accounts for their banking needs. It's a violation of FEMA law. They don't know that there are many specialized accounts meant for NRIs. There is another set of NRIs who use NRE and NRO accounts. They do not know the other types of accounts that they can make use of. In this episode, we are talking to Expert of the Week, our guest on the show today, Mr. Amitabh Dixit, to talk about the FCNR and RFC account, which can be used by the NRIs and the returning NRIs. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
To talk about the FCNR and RFC account, I have invited for this particular episode an eminent person, the past zonal head of ICICI Bank, Chartered Accountant Amitabh Dixit. Welcome to this episode, Mr. Amitabh Dixit.
Thank you so much, sir. Thank you.
Mr. Dixit, many NRIs do not know that there is something called an FCNR and there is something known as an RFC account. In this episode, I request you to please enlighten my audience about the various aspects of these two types of account. I'll take you through small questions for the ease of presentation of the subject. So kindly bring to the benefit of my audience the answers around that. My first question is, who can use these FCNR account or foreign currency non-resident accounts?
So, foreign currency non-resident accounts are basically FDs that are offered to NRIs. As the name suggests, these are foreign currency non-repatriable accounts. So, an FCNR account allows the NRI to hold their deposits in a foreign currency, specifically designed as a term deposit instrument.
Do you mean to say the FCNR accounts will exist only in the form of an FD, or do they also exist in the form of an SB account or a current account or an RD account?
No, so FCNR accounts are specifically FD accounts which are offered to the NRIs. These are not savings account or current account or RD accounts. These are fixed deposit accounts for a specific tenure.
Now the question is, who is eligible to hold the FCNR? See, the reason why I'm asking you this question is there are various types of NRIs. There are NRIs for Indian citizens. There are OCIs. There are foreign nationals. So there are PIOs. So which category of persons can hold these FCNR deposits?
So FCNRs can be held by non-resident Indians, NRIs. They can also be held by PIOs, person of Indian origin. And they can also be held by overseas citizens of India, OCIs. So all these categories can hold FCNR accounts.
When you say FCNR accounts, it means it's a foreign currency account. My understanding is that it is not a rupee account. If it is not a rupee account and if it is a foreign currency account, the most popular foreign currency which is known to us is the US dollar. But there are also equally popular other foreign currencies, like now you have Singapore dollars, you have UK pound, you have euro, you have yen, and various other countries' currencies. So which currency is there in FCNR, or is there a different currencies which an investor can use to opt while he does the FCNR deposits?
Typically, all the large currencies are covered under FCNR. It has US dollars. It has British pound, GBP, also euro. FCNRs can be made under euro, Japanese yen, Australian dollar, and Canadian dollar.
Now for NRIs, when they hold monies in NRE account, that money is freely repatriable. Now, what are the properties of this FCNR account? Is it to be used in within India, or can they repatriate money? What type of account is this?
So typically, an FCNR account, which we earlier discussed also, is a fixed deposit account. The money is freely repatriable. Both the principal as well as interest can be repatriated.
What about the taxation of interest earned from FCNR? Is it taxable in India?
So interest earned on FCNR, see, largely, if you look at the construct, these are meant for people who are staying abroad, largely NRIs, and the interest earned here is a foreign income. It is not taxable in India.
So it will follow the same step as that of the NRE accounts when it comes to question of taxation. The only difference is that it is a different currency held there. and it is available only in the form of an FD. Unlike in NRI, you have different types of bank accounts available, but here only an FD is available.
Correct.
If somebody wants to do an FCNR deposit, are there any specific maturities, minimum maturities, maximum maturities, which is permitted by the bank?
So typically the maximum maturity is a tenure of 5 years. And generally the banks offer a minimum maturity of 1 year for an FCNR deposit. But these tenures may vary from bank to bank. So banks may have a specific tenure also. But the maturity periods typically ranges between 1 to 5 years.
Let us say that there is an NRI who wants to make best use of the FCNR. What is the process that he has to follow to do the FCNR deposits?
So the first step is choosing the currency. Naturally, the NRI would have his own currency in which he would operate. It has to be from the listed currencies. So the first step has to be to choose the currency. The second step, of course, will be to choose the bank. Third process would be the tenure type, because different tenures would have different rates. And typical advantage of FCNR is the better rate on an FD. So he'll have to choose the tenure as well. And then he will have to remit the funds to his banker. These funds will not go to a specific account. They will have to be in the purpose of the account. You'll have to mention that these are for FCNR deposit, and the banker will settle it into a FCNR deposit for the specified tenure. So that's how it is. The remittance can be done through wire, through an NRE account, or external funds. The way remittance happens to in India, it can be done through that, but only NRE accounts.
One of the things that has been informed to me by many of the NRIs is they remit the money from abroad, and the bank receives the dollar. And bank will immediately convert the dollars into rupees and credits it to their NRE account or NRO account as per the account that the investor has chosen. Why this happens? Suppose my intention is to make it into an FCNR deposit. How should I remit this money from abroad? What instruction I have to give to the bank or the AD bank of that particular country or the exchange of that country? And the bank here should not convert this from dollar to INR and again reconvert, and all these problems and loss of the exchange cost which gets incurred there. How can somebody take care that the money is still held in dollars when they receive the money here in the bank?
So see, typical process is when you remit the money in foreign currency for the purpose of FCNR, you do not mention the account number only. The conversion would typically happen into an account. So if you don't happen the account details, and in the disposal instructions that you send, you clearly mention that the amount is towards FCNR, and you also mention the tenure of the FD required. So these two things in the disposal instruction should ensure that the bank does a transfer to the INR in terms of dollar proceeds that they've received.
But will a foreign bank remit money without an account number?
So yes, the disposal instructions that you give in an FCNR, they will be able to use those codes and give it to the national bank, and then they will process it and credit it to the account, because FCNR typically, because it's an FD, every time there would be a new account that gets created. It is not a running current or a savings account, and hence a new account would get created every time a deposit is made. No.
So there is no need for an NRI to convert it into Indian rupees and then convert it to FCNR. You can straight away write in your remarks while you remit the money that the intended purpose is to make an FCNR deposit. And as you say, there is no need to write the NRE or NRO account number. The disposal instruction should clearly mention the branch to which it should go, the beneficiary, and clearly to mention that this is for the purpose of creating an FCNR deposit.
Absolutely.
Let us say somebody has a NRE fixed deposit or an NRE account. He is not sending money from outside. Rather, he wants to use the INR deposits that he has, or the which is there in his SB account or maturity proceeds of the SB account. Can that be converted into an FCNR account?
So yes, NRE funds or funds held in an NRE account which are already repatriable can be converted to the foreign currency and can be used for FCNR deposits.
Mr. Dikshit, now an NRI has an option to hold in NRE account, INR, or a foreign currency account in FCNR. What is the specific advantage an FCNR account gives to NRI over that of NRE account?
So the advantages of FCNR account typically are that the conversion costs are not there. In case an NRI invests in the rupee terms, first thing is he'll have to convert the foreign currency into rupee. There is one instance of conversion cost. Then if he wants to repatriate, there's another instance of conversion cost which we'll have to do when he converts back that rupee into the foreign currency. So that cost is not there. So conversion cost is better. He's also saved on the currency rate fluctuation risk, because typically an NRI who's residing abroad and wants to use the same currency would want to continue in the same currency. That rate fluctuation risk is saved. This is also having a lot of tax benefits because it is treated as a foreign income and not taxable there. Benefits of easy repatriation are there because this is freely repatriable. Also, one very big advantage is the interest rates here are higher compared to the origin country, the foreign country in which we are looking at deposits. So, for instance, US rates. So, our rates on FCNR are much better than those rates.
Mr. Dixit, my next question is, NRIs want to have a higher yield on the FCNR deposit. What are the key points that they have to keep it in mind when they are doing an FCNR deposit? How they can get a better yield? What are the points that you suggest for the audience?
So one point which is very important is they'll have to think through the tenure, because typically different tenures, banks will have their own asset liability programs, and basis their ALM requirements, they will decide different tenures may have different interest rates. So there could be a scenario where there's a special rate tenure for a bank scheme is there. So somewhere some banks have a 395, 90 day or those kind of tenures also. So different rates or different tenures may have different rate buckets. That is one thing that they'll have to keep in mind. Second thing is, at times there's also some discussion and negotiation which is possible in high value FCNR deposits. Largely, a lot of these FCNR deposits are high value deposits. And while the banks have a standard pricing on the interest rates, but on FCNR side, because these are high value deals, special rates can be given. So that discussion and negotiation can also be done by the banker. Also, the choice of banker is also very important here, because different banks will have different rates for this thing. So they'll have to carefully study the market. They'll have to carefully look at different banks. What are the propositions? What are the rate tenures? And can the special rate negotiation be done with the existing banker or with the banker that they are proposing to do FCNR? I think these are largely the points that they need to keep in mind while doing an FCNR.
Mr. Dixit, thank you for all these answers around FCNR deposit. I'm very sure my audience is more knowledgeable with the answers that you have given now. Now let's look at the other special type of accounts, the RFC account or the resident foreign currency account. What are RFC accounts and who can hold these RFC accounts?
So see, typically what is an RFC account is resident foreign currency accounts. These are accounts which are offered to people who are resident Indians who have returned to India after residing abroad. So these are basically accounts which are allowed for returning NRIs who can hold funds under foreign currency in the country. So PIOs can have it, NRIs can have it. In fact, some of resident Indians also now have an option of RFC. OCI foreign nationals cannot hold RFC. See, basically a lot of people who go abroad also have a desire to come back home and they want to stay here. At times they stay here for some small period of time and that they want also evaluate their options here, and then they may decide to go back. So RFC accounts are very good option for those people who come here. They want to test the waters, so they can park the funds or savings of the foreign currency in the RFC account. And then if they decide to move back, they can move those funds there.
Mr. Dixit, why should somebody be holding an RFC account? Are there specific advantages for a returning NRI to hold these accounts as RFC account? Or what if he converts this back into the Indian rupee account? What's the specific advantages that come with RFC account?
Typically, 2-3 things are there. One is that when a returning NRI comes to India, he may want to retain some of his funds in a foreign currency to have the foreign exchange or rate benefits. Right? There's always this currency fluctuation risk. So that fluctuation risk is prevented in case of funds held in an RFC account. Also, there is both withdrawal convenience in an RFC account. You can withdraw through INR. You can also repatriate in form of a foreign currency, or you can withdraw in form of a foreign currency. So those things coupled with better interest rates, because when you put a money in a savings account or an FD, you will get those interest rates. RFC FDs can also be made, and RFC savings account also you can park the proceeds. So you will have the interest rates also there, and the taxation benefits is also there for different taxation benefits depending on the residential status is there.
My next question is, what are the types of RFC accounts somebody can hold? You said in case of FCNR account, this is only a fixed deposit. Are there any other varieties of RFC account permitted?
So RFC, yes, definitely. RFC can be held in all the three prevailing formats. It can be a savings deposit, it can also be a current account deposit, and it can also be a fixed deposit. So all three options are permitted for an RFC account.
So the major difference between an FCNR and RFC is FCNR is for somebody who is staying outside of India, and the only mode of holding is fixed deposit. The reverse of this RFC is only for the returning NRIs or somebody who has become a resident post his tenure as an NRI. And you can hold this foreign currency. However, you also have the benefit of holding it in the form of an SB account, current account, as well as the fixed deposit account.
Correct. That is the right understanding.
When we discussed on FCNR, you gave us the different currency options available for an investor to choose from to do the FCNR. When it comes to question of RFC, is it the same choices which are available to him, or there is a restricted choice?
So largely same. Typically, broad four currencies are available: USD, British Pound, Euro, and Japanese Yen. These are the currencies which are available for RFC deposits.
In case of FCNR account, these accounts are freely repatriable. And the RFC accounts are meant for returning NRIs and the resident Indians who have become resident Indians after their stint as an NRI. The monies which are held in RFC account, are they freely repatriable, or do they come under LRS, or the paperwork are required if the monies have to be repatriated?
So the money in RFC account is also freely repatriable, because that is basic intent of the regulator, that somebody comes and he wants to park the funds for a specific period of time and then decide whether he wants to move them back to India or move them abroad. So that, with that intent in mind, RFC deposits are freely repatriable.
Now let us say there is an NRI who is returning and he intends to hold these RFC account. What is the process that he has to follow to get these RFC accounts done? So how the monies can come into RFC account?
So money can come into an RFC account through multiple ways. Largely, he can remit from his foreign currency deposits that he's carried with him. He can also remit from his NRI account. He can also remit the money from the international money changer or money to India processes. And those money can come into an RFC account. And he can specifically give the instructions for credit to an RFC account, which can be a savings current or FD, as we discussed earlier.
Mr. Dikshit, thank you very much for your time, and you have brought from a banking perspectives what are FCNR account, RFC accounts, the rules and regulations, repatriation, taxation, and various other aspects of these two banking accounts. Thank you very much for your time and efforts to make known to my audience all information around FCNR and RFC account. Thank you very much, sir.
Thank you very much. Absolute privilege to be a part of your program. You have a wide reach, and I am very happy to be of any help. Thank you so much.
Dear viewers, hope the video that I have done today helped you to understand FCNR and RFC accounts a little bit more in detail. If it did help you to know information that you wanted to know about these two accounts, do give me a thumbs up. If you are somebody who is yet to subscribe for this channel or seeing this channel for the first time, please do hit the subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the social media handles on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another episode, with yet another expert next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.